Suddenly, affordability has become the buzzword of the economy. But listen, you've been watching this show for a long time. For years, I've been talking about affordability, especially when it comes to housing. And for a while, it was a lack of supply, right? That was the blame for the problem. But as we can see here, supply has bounced back pretty strongly. Of course, one of the other reasons supply is stacking up the way it is. We're now starting to see a record number of buyers or would-be buyers get, I would call it pre-buyer's remorse, right? So this kind of thing is happening. In addition to that, the thing we talk about all the time, sky-high mortgages compared to recent years, right? You get some old folks out there, and remember when they paying 20%. Of course, you add that to the issue of housing being so expensive. My grandfather bought a house. My mom and dad bought a house at 30 grand. My grandfather bought one at 3,000. Why do I have to spend 110,000, right? The annual income has absolutely skyrocketed, and it is a sore spot, a real sore spot for younger millennials and Gen Z. Now, earlier this year, Scott Besson talked about this. He said President Trump was considering declaring a national housing emergency. He wanted to address the soaring prices and the shrinking supply. And therein lies the rub. Again, I'll talk about the boomers, right? The boomers who own all the houses and the boomers even on the Federal Reserve, they think that declining house prices are bad, And so just to quote Stan Laurel, here's another fine mess. I want to bring in now two of my favorite housing market experts. Joining me now, Dallas-Fort Worth housing and macroeconomics analyst Amy Nixon, along with Haringa CEO and founder Melody Wright. Ladies, thank you both. I've been wanting to do a special on this for about a month. Haven't got it cleared yet, so we're going to do a long segment on it. And I want to examine the current conundrum. One report states that first-time home buyers are now 40 years old, first time, and that median is 60 years old. Now, some quibble with the data, but younger folks now, are really suffering because, they can't get in the housing market. But I want to ask you about this, just what happened here. Let me just start with you, Melody, on the notion that just younger people can't buy houses right now.
Yeah, unfortunately, this market has become about speculation, Charles, and no longer really home ownership for Joe and Jane. And so as that occurred, they got completely priced out. And as we know as well, the boomers own most of the homes, and they're not doing distressed selling right now. There's not really an impetus to get those homes to the market. So it's happening slower than I think that people would want it to happen.
So the question, though, is does it qualify as a national economic emergency? Again, considering, Amy, the delayed household formation delays a whole lot of things that have been important parts of the economic food chain.
Absolutely, it's an emergency, Charles, because we've already seen in New York that this is now a major political issue. And if we do not start finding ways to reallocate the wealth voluntarily, then young voters are going to vote to forcefully redistribute the wealth. And people are not going to like that. That's going to be a massive political uprising. That is an emergency for a society.
So then what do you say to current homeowners who are saying, hey, I don't want my house price to go down to save the housing market?
Would you rather your house price go down a little bit, or would you rather that young people in this country vote in entire socialistic framework that is going to forcefully redistribute wealth to a point where you're in a much worse situation than losing maybe $30,000 of equity in your home?
The blame game. There's a lot to go around, and some folks point to institutions, whether it's corporations buying up all the houses along with hedge funds, or whether it's the home builders themselves reluctant to build starter homes, or the Federal Reserve. Where do you pinpoint really where's the pain coming from, the problem coming from, Melody?
Well, unfortunately, I think a lot of the pain is coming from these government programs, Charles, that have gotten off the rails and essentially has juiced this home market when really prices could have been coming down had we not had such generous government programs and down payment assistance. And unfortunately, that's just in many ways predatory lending, getting people in the home that can't afford it because there's no skin in the game.
Speaking of that, mortgage rates also, you look across the country and it's like, okay, so 6.4 in Texas, 5.13 in New Mexico, 4.5 in Arizona. How does anyone understand, what creates these mortgage rates, Melanie?
Well, so it depends on your credit quality. So lower credit quality is going to demand higher mortgage rates. And so as well, in our heavier building areas, they're doing a lot of this FHA lending, which is also higher mortgage rates because it is lower credit quality. So that is really what's driving that.
All right. I mean, it's Amy, you post all this kind of stuff all the time as well. Is it about just maybe moving to a state where you could get a good mortgage then?
I mean, and for more so, it's been moving to a state where there is housing inventory being built.
Right.
That's the story for young people relocating. And I don't know that, moving necessarily, the mortgage rate, like Melody said, has more to do with your personal creditworthiness. Right. And as we've seen, young people's credit is not going in the right direction right now, especially with that student loan spike chart that you just showed earlier. It's not a good picture for young people. And so even if we could get mortgage rates cut lower from the Fed and see a drop, young people still have a barrier to getting a low rate because their credit is not as good.
Should they wait, Amy? I mean, it's still the American dream. Should they wait for grandma and grandpa, hope they leave one of their houses to them, or should they still, if they can't afford it, buy a house?
You should never buy something that you cannot afford. And if you're going to be stretching,
right,
then it really has to do with how much you're comfortable with that particular home for a long period of time, because you may have to ride out a rough housing market for a while. And you don't know if the past 20 years of returns are going to be the next 20 years of returns. Certainly our demographics don't look promising for that. So if you can afford a house, which isn't very many people, and you find one that you want to live in for maybe 15, 20 years, then go ahead and buy, because grandma might live to 95
yeah,
and then drain all her money in a senior living home.
Hey, I advertise this segment as solutions, right? Because you two always have great ideas. So let's talk about it. First, though, the Trump administration, they're throwing out, I'll call them trial balloons, eliminate the capital gains tax, portable mortgages, 50-year mortgages. I want to hear your suggestions. Amy, let me start with you. What do you think could help move the needle here?
So one of the ideas that I had was a one-time use 3% mortgage rate that is offered to non-homeowners who have dependents under age 18. And this is for an owner-occupied home only. And what this would do, yes, it is stimulus, but it is a targeted stimulus. In the past, we've offered broad stimulus that just creates a bidding frenzy from institutions, right, and everybody wanting second, third homes. This would get families that have kids. This would help birth rates. This would help young family homeownership rates. And this would give them an opportunity to get into the market with a low rate that a lot of other people have, without competition from institutions and from other wealthier buyers.
I like that. Melody, let's talk about ideas from you.
I think we have to attack the system, Charles. And what I would start with is changing those conforming loan limits and have them be sort of tied to median income as opposed to market value. But I also think we probably need to start thinking about winding down the agencies. Since their institution, they have oftentimes helped to inflate these bubbles, and then, to the detriment to those poor folks that got into those homes they couldn't afford and then had to endure a foreclosure and the impairment to their credit. So I think that we really should start looking at the way right now the government is holding almost 85% our government-sponsored enterprise of mortgages. So we need to attack the system, as well as we need to let this stuff come back to the banks who hold deposits and are not reliant on cheap borrowing to do this business. We are soon going to see a lot of trouble in the non-bank mortgage companies. So we need to think about relaxing some of the capital requirements on the banks.
Yeah, and I don't think lowering the FICO scores is going to help either. Amy, Melody, thank you both very much. Always do an amazing work out there. Appreciate it.